Hello there, traders and investors. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets. We're doing it from a neoclassical perspective. That means we're looking at supply and demand on the charts. We're using tests of significant areas to make decisions about what is and isn't happening in the market, in stocks, in sectors, and then using that knowledge to trade on. Probability based, folks. It's tape reading at its best. That is neoclassical. Do this show 4 times a week, every Monday through Thursday. Broadcast every 4, 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel L.A. Little. If you haven't subscribed and you want to, just reach up in the right-hand corner and do so. Anytime I push public content, you'll get a notification for the show. As far as what happened today, another grind, folks. We are officially in grind mode. Pretty much green across the screens. A little bit of weakness in Hong Kong. Outside of that, it was bonds and gold. Everything else wants to go higher. The dollar, we'll take a look at that. The dollar actually spiked higher to begin, pulled back, and then actually tried to come on again. What we saw today was a rotation into the industrial metals. They've kind of been out of favor for a few days, actually a week and a half or so consolidating. I wonder if something larger is about to take place there. So let's go to the charts, see what we got, and try to analyze what's happening here in this market. So we've had big moves to the top side, right? We're all aware of that. I mean, significantly large moves. You don't get them this big that often, and when you do, you got to make some money on them. As far as this one, this is a large ABCD structure. It's got another 2.5% or so, 2.5% left to hit its target. It's not that far away. What is it doing now? Well, it just looks to me like it's consolidating up here. Kind of got this consolidation move. You had the big spike up in volume on the quad witching. You had the Fed here. That's this wide price spread bar. When we talk about significant bars, that's a significant bar. You get over it, right? Then you can spike it again because the stops will build up in that area. That is the area where if you want to take this market short, that's the place you want to try to short it. If you get on the wrong side of that short, though, you're going to have to cover it, which means you're going to become an artificial buyer and spike the market along with everybody else that has done the same thing. That's how you look at the markets. That's how you read the tapes. If you look at, S&P done nothing wrong. Has it done anything to test yet? Not quite, right? It's going to, get over this big bar, but I don't think that even though it had volume, there wasn't much else up here. It's just volume. I think the bar that's of importance is the Fed bar. And so we're going up. We're going to try to test that, and that's where we'll get a release of information. That information we can use to make decisions about what to do or not to do in the coming days. In terms of the Fed bar here on the NASDAQ, 54.85.12. Where do you close it? 54.83.94. It's nestled right up underneath it. Wants to try to make the break tomorrow. NDX. Basically the same thing. Fed bar here is 495.990, and you're sitting right up underneath it. Not very far to go. Russell. If we look at the Russell now, the small caps have been the juice. The small caps are trying to make the run. Small caps are a little different, right? Because the Fed bar is the significant bar on the downside, not the upside. And so as the Russell starts making its move back to the top, it's got a swing point high it's going to go after. And, the Russell, one of the things the mentors had pointed out to me today, one of them had pointed out is you got ABCD structures here, right? These are large ABCD structures. They present another 8-9% to go. I don't know the exact number. I could look it up, but, it's not a small one. And then you got these little nested ones that are starting to take place inside of it, right? And so they'll project up as well. You don't have just that. I mean, it's even more. If you pull over the weekly charts, right, you've got ABCD structures on your weekly charts, right? And then you've also got them on your monthly charts. And so when you start adding all that up, right, that's what can give you juice to the top side. And if you look at these structures, right, they all try to complete out. And so when you're looking at this, right, and now you've got a little ABCD structure right here that projects again. This is a powerful move. I don't see it stopping short of where it's trying to go. You also have it over here on your monthly, what we were just talking about. Project them all forward, look at them. They're all going to shoot up there about 8-9% higher. It doesn't mean you're going to have to go straight there, but it says, when you get them on all time frames, it says, your probabilities are pretty high you're going to get up there. And so, the backdrop here is that even though we look at these markets and we think to ourselves, oh man, this thing's extended. Well, maybe so, but it could get even more extended. So don't sell yourself short on these markets. Dollar, now the dollar spiked up this morning, got over that high and failed. 26.76 was the high. You spiked it on the open, 26.77. You close it. It wasn't exactly at the low, but that's a dark candle on a failed test of a high. It's not the highest probability failure, but it's a failure at that top. So I think you'll get some sort of consolidation pullback here off of this. And if that's the case, right, you got to expect it to come back down into this area, potentially back into this bar. So that's the dollar. Now, if the dollar is going to take a rest, that's going to help some things. Now, the first thing everybody thinks of is gold and silver. So let's go look at gold and silver. We did talk about those, I believe, last night. And let me pop those charts up. And what we did is we had a little, dead cat bounce up. I'd said that, we're not quite there yet, but we'll see what it looks like when it comes back down to test. Well, it came to test today. And let's look at it. No, it didn't get there. So this is interesting. So this is getting to be that case I talked about. What you really would have liked to seen today was an actual test. You would like to have seen it go down, hit this volume bar, and have nothing. It didn't quite get there. And so we're not, I don't know that you want on a downtrend like this. I don't know that you want to try to guess where your bottom is. Far better to let this thing tell you. And what I mean by that is your little volume that's in here says that this is going to be a difficult spot to get back over. If it trades back up above here, then something's happening and you can get a bigger move back to something else of resistance. And then that's a trade that you can make, right? You got some juice there that you can actually get on top of. But you're counter trend trading. So when you're counter trend trading, you don't want to guess, right? That's a good way to guess yourself out of a paycheck, right? You don't want to guess when you're going against the trend. You want to get a signal that you can live with, a high probability signal. A good one would be, you break under this, you can't stay under it, you flip back over it, and you got less volume. That would be a decent signal. You haven't got it yet. So you wait. And you wait until you get something that you can work with. That's on the daily, the weekly. Now the weekly's testing as well. So this is a decent test over here. What do we got? 107.35. Last week we tested it. Under, back over. You did 50.8. Yeah, this is getting there. That's about, that's not a bad move. Boy, what you'd love to see this week is that test on the daily and the weekly. And both of them fell, and on Friday you find yourself back up here somewhere, right? That would be an entry that you could make for a counter trend trade. Of course, what we're really watching is the monthly. The monthly is doing the trend trade test, right? It's coming on the breakout bar. It's already got under it, back over it. It's holding it. It's not going to have the volume. So, everything's setting up here. It's getting very close. You got to keep watching it. Not quite ready, in my opinion, but getting close. The ones that you should be thinking about on this dollar weakness is the mineral stocks. There's many of them you can choose from, and I'll just pull up one of my faves is the XME. You got this downtrend, right, correction after this big spike. So if you go back and you look for your structures here, what you have had set up on the way back here is kind of a low volume push to the downside. The only place you got volume come in was actually a spike back to the upside. So you got this low volume pullback. And in this particular case, right, there's a small ABCD structure now that's, it doesn't have that much to it, but can take you back up to here. That's that structure. But there's larger ones in play. I mean, if you go back to here, let me see if that's really true. I'm not sure if we actually hit that. It looks like we almost hit it. So maybe that's not quite true. Let me go here. And I believe you actually do have 1, 2, 3, 4. Yeah, it's from here back, right, that you have the larger one. Takes you to there, back down to here, right? Takes you up quite a bit more. And so there's some larger structures that are still in place to take this higher. You're getting a pullback, right? Some sort of a nested ABCD structure to actually do that. And so when I see these kinds of things set up after a consolidation, you know, you come back. In this particular case, let me clean this up so you can see it. The bar that you really want to hold is this bar, because that's also a swing point break, retest, regenerate. In other words, when you get over that, if it comes back into that area and it can't break it down, then you have to expect it's going to generate it back up in the direction of the trend. That would make your ABCD structure something like that. And then if you take this larger one, you put it in place, right, you get these two structures, you know, working towards the same price points. That's on the weekly, and I think the monthly is even better. Yeah, it is. And so, you know, even though you feel like these things are extended, look how far they came down, right? This is nothing compared to what it lost. So if you come back to there, back up, right, this thing can go all the way back to the top eventually on this time frame, on the monthly time frame. Now you got some things you're going to work into, and you're already working into, which is one of the reasons this is probably having difficulty. Just like I talked about a bullish retest regenerate, this is a bearish retest regenerate. In other words, you're coming into something where you broke down, you haven't tested it now in way more than 6 bars, which is the important point in neoclassical. It's been almost 2 years, right? It's almost 2 years. That's a long time, right? As you're coming back up there, whoever bought this anywhere in this area up here is a loser, right? Anybody in anything up here. So anything from 2015 back is losing money. And so as you come eating into that, what are they going to do? Well, those guys that bought down in here are certainly going to sell it to you. And when you get up a little bit higher, the guys that bought here, they're all going to sell it to you. That's supply and demand on the charts, folks. It's obvious. I want you to know what you're looking for. So yeah, this thing can go higher. It's going to grind. It's going to take a while. If you go back to those weekly charts, those projections are going to get you right up to the top of this probably, 38.22. That would be a full retest regen. It shouldn't do that on the first trip back. If it does it, it tells you the market's stronger than you think. It tells you that you're going to want to look for the retraces again off of that and buy it again. Folks, we're grinding. You got 2 more days, no, 3 more days. What is today, Tuesday? 3 more days in a week, right? And then you get a holiday on the 26th and 4 days into the new year. This is grind mode. Volume trails off. The trend that's in effect typically finds buyers, and you just grind on up into the new year. What you do about the new year might be something you want to start thinking about. I'll try to drop some hints about what I think you might want to focus on here in some of these sessions to end out the year. Have yourself a great one. I will see you next time. Good night.